So let us look at today's price action for XAUUSD. Today I didn't use the RSI, I'll remove it. So we missed out on a couple of opportunities, but I believe the markets are not going anywhere. We will always trade some other time. So this is today's price action for gold. Let us go to the daily time frame. Usually the first activity of the day is to mark previous day's high and previous day's low. And previous day's high, first of all, today is Monday, 1st of June, and yeah, reviewing price action for XAUUSD or gold. So that is Friday's high, which is previous day's high, and then Friday's low, which is previous day's low, like that. Reason we mark this is because we know that price is eventually headed for one of these directions. So this is previous day's low, and this is previous day's high. So once that is marked, you also mark the new day open. New day open was around here, you can see around there. So NDO, and then now dropping to the 15-minute time frame where now the real thing is happening. So here now we are looking at what is happening in the 15-minute time frame. So the 15-minute time frame is this, where price opens here. Even though this is the Reeves chart, it doesn't give us the real new day opening price, because there should be a gap. Let me show you where the gap is on you can see, where was it? Was it Friday? There's a new day open gap on the rail and on these charts. Trying to find, yeah, so you can see right here is where we had the new day opening gap right there. But you know, the Rev is slightly different in how it prints their candles, so we live with that anyway. So coming back here, you can see price gives us a slight bullish run like this, and then rejects lower like that. And then I would want to assume the rejection is because of this fair value gap, inverted fair value gap right here. So close below, tap into this fair value gap and go lower. So that I believe this inverted fair value gap was pushing price lower. So the moment we hit that, what I was ideally waiting for is for price to give me a proper bearish break of structure here, or market structure shift as others will call it. This was the, was it this one? Yes, this was the break of structure to confirm that we had a bearish day. So the moment we hit that bearish bias confirmed, this becomes the assumed high of the day. So this week right here becomes the assumed high of the day, following the concept of open high low close for the formation of the daily candle. So the daily candle, in the mind, we know it is going to be a bearish candle. So quickly now looking at what price does next. Price gives us this bearish structure, break of structure mean, and then slightly retraces into this zone and then comes back. So which zone am I talking about? I'm talking about this fair value gap right here. So this fair value gap, you can see is where price comes to. Let me just refine that. Can try and refine it better than that. So right there, and also right here. So it doesn't look like much, but price taps into it. You can see that wick right there. So that is the wick I used to know that price forms a short-term bullish structure that taps into this fair value gap and then closes below this swing low right here. So this is another bearish break of structure to confirm that price is strongly bearish. Now, so where does our trading opportunity come in? The last bearish candle prior to a series of candles that tap into a fair value gap or an area of value. This last bearish candle right here, it becomes a breaker block. Why is it a breaker block? It's a breaker block because a failed order block is usually a breaker block. So this fair value gap pushes price lower to break below this order block, thus converting it into a breaker block. So from here you can see price closes below it, giving us breakout structure, and then comes back into this area. You can see that. You can see let me use this arrow, this structure like this, and then comes back into this zone like that. And now this is where our trading opportunity was. So price comes into it, gives us a bearish engulfing pattern. So these two candles, it's a 3-candle engulfing pattern, but we use these 2 bearish candles to mark that. And then range high and range low of these candles, we mark it as such, and then price retraces to the midpoint and gives us a bearish move. So now at the point where it is retracing to the midpoint is where we are now interested in taking a trade, and this would be such an area like that. So now this is the 15-minute time frame. Drop to the 1-minute time frame and look at what price is doing around that area. So price is giving us this structure and comes back into this the premium side of this range, and then closes below. At the point where it is closing below, that is actually where you want to get into a trade. However, if you do not want to use that as a confluence, you can see another confluence would be let me pull up the RSI, even though I didn't use it, RSI 14, because now we are on the 1-minute time frame, short-term signals for sales. RSI 14 gives us a bearish divergence like this. You can see that. So bearish divergence as such, and then a break of structure below this level, and retracement to this level can be your entry criteria. And you can see also it comes also in this area as well. However, aggressive entry is just get in at the midpoint of this range, and that is now where you get these entry signals right here, or entry criteria as such, and then stop loss just above this engulfing pattern like that. And then you want to target previous day's low, which is ideally this line. You can see this line here, that is the previous day's low, giving you that almost 3.84 R, and then the grid itself would now target considerable levels. Let me see if we had any in the daily. In the daily we have this, but you can see price doesn't quite get there. It's a very long range. Let's look at the 4-hour time frame for any major swing low, this one right here, but it is not anywhere near. Let's look at the looking at the 1-hour time frame. This swing low right here would be a good one. And then 30-minute time frame, let's look at the 30-minute time frame, the same. 15-minute time frame, 15-minute time frame gives us this. Let me use horizontal ray. It gives us this level right here. So this was the nearest, and you would have used that as your TP for this intraday trade, because you're not trying to hold long term, just if you want a few pips and you're out. And so you can see this gives almost a 12.12 R risk to reward ratio, a very clean trade that we missed out on during the day because I was busy. So this is another layer of confluence, or another trading idea you can use, because we've always used breaker blocks. I mean fair value gaps and inverted fair value gaps, but this time you can combine both fair value gaps and breaker blocks to frame trading opportunities. And you can see this one was a very good straightforward trade right here, and then just a few minutes, this was like 45 1 hour of holding this trade and you are already into 12.12 risk to reward ratio profits. So that is how today's price action was on XAUUSD or gold.